So what in the world just happened with Bitcoin? It went on an absolute tear. And today, we're going to unpack exactly what went down. We'll follow the clues, trace the money, and really get into the story behind one of the most powerful rallies we've seen in months. Let's kick things off with the headline number that got everyone talking.
Yep, it all starts right here. A massive 11% surge. We're talking almost entirely green candles, just a straight shot upwards.
We're going to investigate this rally piece by piece, looking for the evidence to understand the forces that were really at play here.
And let's be super clear. This was not just some random blip on the radar or a normal market swing. This was a major event. We're talking about the second strongest weekly performance in half a year. That kind of power? Well, it usually leaves a trail.
So, where does our investigation begin? Well, it starts with the very first piece of evidence that suggests this wasn't just retail excitement. It's time to follow the money trail. The very first signal that something big was brewing came from an indicator called the Coinbase Premium Gap. Now, for those who aren't familiar with that term, let's quickly break down what it is because it is absolutely crucial to this whole story. Okay, so simply put, it's the difference in Bitcoin's price on Coinbase versus other exchanges around the world. And why does that matter? Because Coinbase is kind of the go-to platform for a lot of large US institutions. So when its price is higher, it's like a giant neon sign flashing, "Big US money is buying." And that is exactly what we saw. The premium jumped to a positive $100. Think about that for a second. Somebody was willing to pay $100 more per Bitcoin on Coinbase than anywhere else. That's not a small difference, and it points to some serious buying pressure.
So, why does this scream institutions? Well, this slide breaks it down perfectly. Unlike a retail trader who might just impulsively click buy, these large funds operate under very strict frameworks. This move happened right at the start of a new month and a new quarter, which is classic textbook timing for institutional rebalancing and strategic positioning. They're not reacting, they're executing a plan. Okay, so if the Coinbase Premium was our first clue, the next piece of data is the smoking gun. This is where the evidence goes from suggestive to completely undeniable, all thanks to the flood of money that poured into Bitcoin ETFs.
Over $1 billion. That's the net amount that flowed into Bitcoin ETFs in just 4 days. This is an absolutely massive number, and it provides concrete confirmation of where all that buying pressure was really coming from.
So here's the crucial point. That $1 billion translates to over 9,000 Bitcoin being scooped up by these funds. This data aligns perfectly with our initial theory. The institutions weren't just nibbling, they were making a major strategic allocation. But the story doesn't end there. See, once the institutional buying started the fire, other traders rushed in to add fuel. The momentum shifted over to the derivatives market, which took this rally and just amplified it even further.
Just look at this. Open interest, which is basically the total value of all outstanding futures contracts, surged by $6 billion, rocketing from $39 billion to $45 billion. This shows a flood of new bets being placed by traders who are expecting the price to keep on climbing.
And we can even measure the aggression behind these new bets. We saw $1.8 billion in what's called net taker volume. That tells us these weren't passive orders just waiting to get filled. No, these were traders aggressively chasing the market up.
A taker order is exactly what it sounds like. It's someone taking the current best price on the market. They're prioritizing speed and certainty over trying to get a slightly better price. They want in, and they want in now.
And this quote just captures the mindset perfectly. It's the voice of urgency, of conviction. It's the fear of missing out on a powerful move, and it's what helped push that rally even higher, even faster.
So, after all that explosive action, where does that leave us? Let's zoom in on the current landscape and identify what to watch for as we move forward. There are two critical levels on the chart right now. First is the range midpoint at around $117.6 thousand. Holding above that is a big sign of strength. The next major target is the range high at $123,000.
So what needs to happen for this rally to keep going? It really comes down to two key things. First, those massive ETF inflows can't be a one-time event. The institutional demand has to continue. And second, the new positions in the futures market need to be sustained, showing that conviction is still high.
And this really is the ultimate question, isn't it? We've established that institutions were the spark that started this incredible rally. But the fate of the market now rests on whether they're going to continue to feed the flames. That's the billion-dollar question we'll all be watching.